Hello, everyone. Good afternoon, and welcome to this session on actuarial transformation, accelerating changes in the product innovation and pricing. India today is the 10th largest insurance market globally and is poised for significant growth, with the potential to ascend to the 6th position if its current double-digit growth rate continues. This optimism is supported by three key pillars, as you all are aware, but let me reiterate. Government initiatives for universal insurance coverage by 2047, favorable regulatory reforms, and the growing adoption of data-driven decision-making. The last one especially is quite significant for the industry. And to boost the insurance industry's growth, the Indian government and the Insurance Regulatory and Development Authority of India, commonly known as IRDAI, have introduced various measures. These include a revised regulatory framework on the use and file system, allowing greater product customization based on assessed risks and the decision to denotify tariffs. That especially promotes flexibility. Additionally, the IRDAI's creation of an online insurance marketplace is set to heighten the competition and also ease price comparisons. Now, the customer's behavior is shifting rapidly in this dynamic environment, and insurances must evolve by adopting innovative strategies to stay especially competitive in this market. That also means offering the right products at the right time with the right personalization. This discussion, in association with SAS, will unpack regulatory challenges, strategic initiatives for product innovation, and how to accelerate actuarial processes for faster time to market. So welcome, everyone. And joining me in today's discussion are our esteemed speakers. Let me introduce you to them. Anurag Rastogi, who is the actuary and consultant and industry expert. Shashikant Dahuja, who's Executive Director and Chief Underwriting Officer, Shriram General Insurance. Manish Sen, appointed actuary for Niva Bupa Health Insurance. And Oana Avramescu, Advisory Global Insurance Solution Leader for SAS. Welcome, Anurag, Shashi, Manish, Oana. Glad to have you on board for this conversation.
Thank you. It's a pleasure for us to be here.
A pleasure as well. So now that the panelists are on board as well, before we move on to the panel discussion, request the audience to leave your questions in the chat box and we will answer them at the end of the session. I repeat, if you have any questions, kindly leave them in the chat box and we will answer them at the end of the session. So Shashikant, Anurag, Manish, Oana, let's begin. Panelists are here and the audience is keen to hear on your inputs. Anurag, let me start with you. I want you to take the first, draw the first blood in this battle. What is your read on the impact of recent stream of changes which are introduced by IRDA and Government of India, especially to modernize the regulatory framework and expand insurance coverage and drive economic growth in this competitive landscape? What's your read on it?
I think the reading is very clear on the wall, Vaishnavi. The industry was opened up to private sector participation nearly 2.5 decades back. And through these reforms, the regulator is clearly sending a message that the industry has come of the age, industry has matured. There's no need to micro-regulate the industry. They can self-regulate themselves. And they can innovate the products, they can change, they can decide the pricing on a very dynamic basis and meet the consumer needs on a real-time basis so as the objective of insurance for all by 2047 can be achieved. And that is the clear reading of the message. The regulator is saying that you need to self-regulate, you need to meet the aspirations of the growing population of the country, innovate products for them, and make insurance available and at affordable pricing to every single citizen of this country.
Self-regulate, innovate, affordable products for every person in this country, which means there has to be grassroots inclusion as well.
Of course. I mean, and so basically, the regulator is saying we are completely unshackling you. They are completely reforming. They are removing a lot of regulations, and they're saying you need to take your decisions. You are mature enough, and you need to reach out to every nook and corner of the country, make insurance available to everybody at an affordable price and on a real-time basis.
So, Anurag, when these are the conditions, and then there is self-regulation on top of it. So there is freedom, but that comes with a caveat. What is the future scope for incremental regulatory reforms and government initiatives that would help us achieve these ambitious targets in terms of, say, insurance availability and penetration in the Indian market. We are also speaking about inclusion here, right? So
Of
what is
course.
the vision for?
So while these regulations are very, very important, but I would still say that these are only incremental in nature. What we have not seen is the transformational regulatory reforms. And to give you some example, some of these discussions have also happened in the regulatory meetings, also in the government corridors. I'll refer to two, three things. One, transformational change that has been talked about for the Indian market is the composite insurance companies. So prior to nationalization, there were composite insurance companies, but for some reason, the decision makers at that point in time decided not to allow composite companies, and there were life insurance companies and non-life insurance companies. And then later in 2005 or six, I think the health insurance companies were allowed by a separate regulation. Now the government has been talking about composite insurance, whereby the efficiencies can be improved, cross-selling can be improved. There are several examples worldwide of very, very successful, very large composite insurance companies. There's no reason why the Indian insurance companies should not allow composite insurance companies, number one. Number two, if I look at the financial inclusion of the banking side, you have seen the massive success of the regional rural banks. Insurance industry, what we see is that insurance is, number one, an urban phenomena. Only the biggest number of buyers of insurance are urban population. The reach of insurance has still not gone down to the nook and corner, to the rural population of the country, number one. Number two, if you look at it, top 5 states of the country will contribute 60 to 65% of insurance penetration. Whereas some smaller states, Northeast and North India, which don't contribute even 1% to the insurance kitty. And so the government has been, and the regulator has been talking about smaller regional and rural insurance companies, preferably at a lower capital, whereby they have they go to a small state and their area of operation is only that state or that rural area, whereby the rural penetration can be afforded. And all of that will have to be on these, will have to ride the technology. Because without technology, none of this will be possible. And when we talk about affordable pricing, when we talk about cheaper distribution models, technology will have to back all this effort. And so I say that some of these changes which have been talked about are really transformational in nature. Till now, what we have seen is incremental regulatory changes, but these transformational regulatory changes is still something that we wait for.
Written by technology.
Of course.
Thank you, Anurag. Manish, who better than you to answer this question on the health insurance sector, especially? Now, the regulator reforms that Anurag was also talking about, such as, say, de-tarification of or use and file, now they're all focused on modernization of insurance sector. And the whole focus is also on product innovation. How has health insurance sector especially geared up to leverage this opportunity of designing and launching innovative products?
I think the insurers have responded well so far to the relaxations which have been offered by the regulation. So predominantly, the use and file was available for the group plans much prior to what was introduced for the retail plans. And what it has actually allowed is it has allowed insurers to actually experiment a lot with certain benefits, and then also it has allowed them to strategize their act in the market, which means that earlier some of the insurers would say that, okay, fine, we want to have a step increase instead of let's say a small incremental increase in premiums, because now possibly you can do it without factoring in what your regulatory approval process is going to consume time. So those are the things which predominantly insurers have done. But I do believe that there is a lot of experimentation and innovation which we are yet to see. One of the key thing which we anticipated when this particular change happened was that there will be a requirement from the stakeholders for a faster GTM, go to market.
Go to market.
And the important thing over there was that pretty much every insurer, you're expecting that those insurers will struggle in terms of making sure that the turnaround is much faster. And
Mm.
that is something which we are witnessing right now, that there's a little bit of stress in terms of making sure that the retail plans are delivered faster to the market, because the expectations have gone up now. And but slowly and steadily, I think insurers and the entire ecosystem will adjust to that, and we will make sure that the systems and the processes are equipped for a faster GTM experience. And I think once that is being done, there will be a lot more innovation happening on the product side as well as their strategies. So different insurers might adopt a different strategy, and then we will see. And we have seen a couple of changes so far, at least in the health space. But I think there will be a few more things which we can witness.
So Manish, where is the gap coming from? Because there is definitely a need if you want a faster go-to-market, which means there's a need for product. But then why is there a stress? Where is the gap in the innovation coming, and what strategy works best to navigate that?
Well, I think it's because the way the technology setups were done earlier, and the requirements which were there at that time point. But now I think the requirements have changed, and you don't have a regulatory layer where you have to wait for 6 months for any new product to get approved, which actually allowed a lot of insurers to have that buffer to develop those product in the system. And this is retail product which we are talking about. These can be quite complex. Some of the health insurance plans are very, very complex these days. It's difficult to understand, and we will see that one of the move which might happen is that the product will again, after achieving a certain level of complexity, might again move towards a more simpler approach, right, where you will have less of complications, or possibly a single sum insured or no sum insured in that matter. And then the other things will a simpler things will kick in, making things simple for customers to understand.
When data is available at this level for us, volume, velocity, what could be the long-term industry trends in terms of hyper-personalization of insurance offerings?
So I think there are few trends which are emerging. So what is going to happen is most of the health insurers today have 2 or 3 zones, or at max 4 zones. What I believe is that for a country like India, it's going to be much more regionalized pricing. So that is something which is one trend certainly going to emerge over a period of time, and people will adopt that. The movement has started. There will be few more rating factors which we can see. I think there will be a lot more focus on the network plans. I think insurers have started experimenting with the networks. Some insurers are going to be liberal. So right now we have plans with 10x, 10 times of the sum insured, and after a certain time point, I think sum insured will lose the sanctity of what it is today, and then possibly we will have a more liberal plans, or possibly unlimited sum insureds which will come into the market. What will happen along with that is possibly we will see some of the cost sharing measures which will kick in, and possibly more aligned with what we are seeing in the other markets as well, right? So possibly there will be more incentive for people. So there will be less of an emphasis on sum insurance, and possibly more of an emphasis on the cost sharing measures, that what you choose, where you go, what sort of room you pick for, what network you pick for, and whether you are willing to co-share the price. So I think those are the key trends which are going to develop. And then possibly I think there might be a little bit of a play with the outpatient coverage as well. So possibly what will happen is that while the inpatient will expand to the hinterlands, and possibly we'll see expansion to the rural markets, into the tier 3, tier 4 cities. But at the same time, to penetrate the urban market more, I think there will be emphasis on the OPD plans as well, and ensure we might see a play with the OPD coverages as well in coming future.
Noted. Noted. Thank you, Manish. Shashikant, my question to you revolves around technology. And as Anurag also rightly mentioned, the new wave of innovation that is coming in insurance is now likely to be influenced by digitization and the increasing use of technology, especially for things like underwriting and claims. And this is where AI or data analytics or automation will likely play an increasingly important role. What are some of the significant changes you're seeing in the underwriting technology landscape and usage in the last 2, 3 years? And what is the way ahead for us?
Right. So I'll start with the very important word called customer experience.
Mhm.
I think when we say customer experience, I think it has become a big differentiator. I think in almost all the industries, give an
Absolutely.
example of Ola, Uber, Netflix, the kind of experience the customer has got from these kind of platforms, that is exceptional. But when we talk about the insurance industry as a whole, including life, journal, health, so that kind of experience is not there.
Mm.
Still the perception says that insurance companies don't pay claims. That is the perception among all the normal populations. Okay. Now, when we say customer experience, it's not only about customer satisfaction. I think it's on when we say customer experience, it's about providing them customized product which are as per their requirement, maybe personalized product, innovative product, bite-sized product. Now, when we see the demography of India, I think our median age is around 28. The young population, you can say.
Mm.
So these population want an instant policies. Okay, they want 24/7 service, and but still, when we talk about the insurance industry, I think there are many insurance companies or even everybody. I think still they are using a traditional method of doing underwriting and settling claim. There are many products wherein still we ask for physical proposal forms, and when the claim comes, the surveyors go and inspect the vehicles. It takes time. So these kind of populations, young population, they want everything instantly. Okay, so now we have an example of now in the last 2 years what I have experienced in the industry. I think the industry has started using AI and ML in a very big way.
Mm.
We talk about the regulator also. Regulator has also given guidelines to the insurance company that they should also, as far as motor general insurance is concerned, that every insurance company will give an option of pay as you drive to every customer.
Mm. Mm.
This is mandatory for every insurance company to give this option. So why they have come up with this option? Because they want to make this product affordable. Because
Mm.
earlier we used to charge the same price. Let's suppose if I used to drive my vehicle from my home to my office and I only drive 10 kilometers, I was also paying the same premium. Why I was paying the same premium? So now with this option of pay as you drive, and if you select at the time of underwriting that yes, I'll be driving my vehicle only up to 2,500 kilometers in a year time, or maybe up to 5,000 kilometers, you will get extra discount. The product become affordable for those customers.
Mm.
At the same time, now if we refer to the IRD guidelines, which recently IRD has come up with, IRD is saying that the insurance company will not ask for any document at the time of claims.
Mm.
Whatever you have to ask at the time of underwriting only,
Mm.
and that is true actually. Now, why IRD has come up with these kind of instructions? Because moment of truth is claims, and perception says that insurance company don't pay claims because we
Mm.
ask so many document at the time of claims. What insurance company have started doing in the last 2 years, they have started actually ensuring, you can say, use of external data sources. Actually, now they don't ask your driving license at the time of claims. They don't ask maybe at the permit at the time of claims. You can auto populate from through API from maybe their public record. Auto populate, you can always do that. There's no need to ask from the customer at the time of claim. So this is what has happened in the recent past, which I have experienced actually.
Understood.
Yeah.
Thank you, Shashi. But now that you say that in the last 2, 3 years, AI or ML or automation or analytics has been used, now is the right time to see the benefits of it or how it's panning out in the insurance industry. So, of course, my questions will revolve around that. And if there are any use cases that comes to your mind, do let us know. Oana, my question to you is Indian regulator environment is liberalizing with pivot towards principle-based approach. So you have global experience, you have had a ringside view of how the development of the industry has happened. Where does India stand in terms of liberalization of regulations? One. And what are some of the critical elements to consider from a governance and auditability perspective?
Thank you. Thank you for the question. Indeed, India is moving towards a more liberal regulatory environment, especially whenever we think about finance technology, but also data governance. This shift is a principle-based approach, which focuses more on a broad and high-level principle than rather prescriptive rules and mirror tends in order to be seen more in advanced economies. This evolution indicates, of course, a maturing of regulatory framework in India, which is a very good sign for you, offering businesses more flexibility, as discussed, in order to innovate and also to adhere to more core values such as transparency, accountability, and also fairnesses. What you mentioned, of course, and what was discussed so far, we see India more closely like mature market like UK and so on that adopted already similar frameworks for quite some time. Now, when we think back from a governance and auditability perspective, what are the key elements that we would like to consider? Of course, we need to think about the clarity and consistency to ensure that all these principles are clearly defined and applied across the sectors without any ambiguity. Because whenever we move from a prescriptive approach to a more principle-based approach, you may have 10 different interpretations of one principle. So we need to make sure that these principles are, let's say, properly read and there is no ambiguity. Then when we think about accountability, we need to have a robust mechanism in order to hold the entities accountable, even though we are talking about more flexible regulatory framework. And as well, linked to transparency, the clear documents and reporting standards, they have to be effective while auditing, or for example, whenever comes the regulator in order to oversight. All these elements, they have to be integrated in the right technology, leveraging the analytics and AI for monitoring and compliance. So it's not only one focus on one element, but we have to grab them all and to assure that they are going in the right direction. SARS has a lot of experience helping organizations in the principle-based approach regulations, providing tools for risk management, compliance, and auditability in general. Very important in order to navigate different complexities of different regulatory needs within high value of standards. Now, whenever we think a little bit on global experience, right? Of course, with our customers, we focus on key areas like data integrity to ensure that we are having reliable and traceable data. And this is the first benefit that they gain with us. Compliance automation, automating all the compliance processes in order to have a real-time monitoring and real-time reporting. This is very, very important and crucial. Risk modeling. On top of that, our solutions are widely adopting financial institutions' needs for regulatory needs, but also addressing also the company goals. So you're gonna tackle, of course, according to your company goals, all the relevant measures and variables that you would like to explore within the modeling. And of course, making it compliant. And of course, all the time, we need to assure that everything is consistent, everything it is traceable and auditable, and no matter which user will use the solutions, they are actually understanding the data, they are understanding the models, they are understanding the results of the model, they are fully explained. Whenever we are talking about AI, machine learning models, they should have the right explainability and fully fair without any biases.
All right. So let me summarize it for you and you can correct me wherever necessary. So India is definitely a mature market in comparison, and your key pillars are data integrity, compliance automation, real-time monitoring. The products also, along with being compliant, address the company's goals where the personalization comes in, and the dashboard is accessible and understandable by all the stakeholders involved.
Exactly right. Well pointed.
Yes, and AI and automation will definitely be at the forefront of innovation in the insurance industry.
Exactly.
Noted. Thank you, Anna. Anurag, let me get back to you right now. And this is where I want to talk about point solutions and how point solutions have been used to target different requirements historically. That's how industry participants have preferred. Now, there are different solutions focusing on, say, reserving, underwriting, actuarial pricing. This reduces an insurance's ability to quickly adapt to changing customer and market behavior. It also impacts on the time to market. And Manish especially said that there's a stress now on to go faster to market. How would time to market factor in the business growth? That's first question. And what gaps do you see in the technology strategy which is hindering this innovation?
Very, very relevant question, Vaishnavi. And, I mean, all these things that you talked about actually were operating in silos. So pricing operated in a different silo, reserving operated in a different silo, product development was a different silo, and distribution was a different silo. I mean, and while the end goal of whatever we do is the efficient distribution of whatever we produce, but they were all operating in silos. And it was also something that was also, kind of constrained by the regulatory requirements, because every product, every price change had to be approved by the regulator. And so any development could not have started. But as regulator unshackles all of these things and says that now you can do whatever you want at the drop of a hat, there is a crying need that these things are completely integrated, both backward for integration and forward integration, whereby you can, and you have to be able to respond to consumer needs on a real-time basis. Till now, as insurance industry, we were selling to the consumers what we wanted to sell. Now I think the time has told, and look at the consumers of, we are ourselves consumers of Amazon and Uber and Flipkart. We kind of demand what we want from them. We demand the kind of service that we want. Time has come when the insurance consumers will start demanding the kind of products that they want, the kind of services that they want, the place where they want, the speed at which they want. And so it will be important for us to integrate all these services into one, and to be able to provide these solutions on a real-time basis and also change them very, very fast. Gone are the days when it took you 6 months to 1 year to think of a product. Today, we may have to come up with a product within a matter of days, if not, hours. But days or a week is a long time today to change, to kind of launch a new product. Price changes, I know in motor people have already made, and I have, as an industry player, I have made, almost a regular price change on a daily basis, even a couple of times in a day. Now, I think those kind of price change and dynamic pricing will be a need, and it will be there across all lines of businesses, be it motor, be it health, be it the small property lines or any other line of business. So this will become the need of the hour. And for that, complete integration of entire solution, the entire, the entire value chain needs to be integrated. It needs to operate completely seamless from the word start to the end. And it has to be based on very advanced technology to be able to meet the consumer needs. And consumers will demand that from us. And this is the goal of the regulator, to remove all these restrictions so that consumers can demand and the insurance company can meet those needs. And particularly, we need to go into the far-flung areas, into the rural areas.
So this is a complete bias market.
It's a completely biased market. And also, if you look at it, we were providing one solution to everybody, from the rural market to the high-end technology consumers. We were selling the same kind of product. Whereas the need of the a rural consumer is very, very different. The need of a high-end technology employee is very, very different. And in between them, there are hundreds of micro segments of different consumer segments who need different kind of solutions, different producers, different products, different prices, and available at different speeds. So we will have to create all those differentiations. And this is where the term that you use, hyper-personalization will become a requirement. And this has already started happening in motor, I can tell you. This is already happening. There are some other bite-sized products where hyper-personalization has already begun to happen. And this will happen across product solutions in the insurance industry.
So segmenting the customers then become very important, right? By demography or behavior and preferences. So what is your understanding of AI ML in the current underwriting processes? Or say, would these algorithms be able to increase the ratio of applications?
Of course, I mean, AI ML will play a massive role, because till now what used to happen was, we used to create rule engines, and those rule engines will be created by us sitting, in our ivory towers, and we will revise those rule engines once in 6 months or once in 3 months or once. Now, today with machine learning, those rules can be automated and they can be continuously improved based on the emerging experience. And so that will have to be there, because the kind of data that will be available in the coming few years will be massive. The
True.
KYC has already been enabled. With KYC, a lot of data can be made available to insurance companies. And so it will be possible to hyper-personalize and to do any of those personalizations. Doing it on a one-to-one basis will be very difficult. We will have to take the help of machine learning and artificial intelligence to create products to suit different people and different
behaviors.
Yeah.
Perfect. Thank you, Anurag. Shashikant, what's your view on this? Because advanced analytics will definitely become important in underwriting. We need to have segmentation of customers. We need to understand their behavior. What role do you see for AI ML in the current underwriting process? And would these algorithms eventually help us to reduce the turnaround time and time to market?
Yes. I think if I'm not wrong, I think insurance industry is the most data intensive industry. Okay. Data is the, you can say, is the new oil for this industry. Data is has become the most important part for this industry. Now I'll give you a few practical example actually. Now what we are using in my organization, and even the industry is also using. Let's talk about the motor insurance first. Now, I think many insurance companies have started using now telematics. Okay, in motor insurance, they have started using telematics, pay as you drive and pay how you drive. Okay, I'll give you one practical example. We were actually experiencing a problem in having good amount of thefts in Delhi NCR. Around 20-30% of the claims were coming from Delhi NCR. So what we did one pilot with one of the vendor in Delhi NCR, and after 1 year, when we analyzed the data, we were able to save 2 big vehicles due to this help of this telematics, and we were able to save 40 lakh rupees. Even if we have paid 20 lakh to that vendor, we were at advantageous position to, you can say. So that telematics data is playing a very important role in reducing your claim ratio also. And at the same time, if the customer behavior is good, he is getting more discount also. You are also giving him signals if he drives fast, and this is also good for the customer. Now, if you talk about the health, now most of the insurance company have started using your wearable devices. They have started getting data from the wearable devices. If the customer is good or wellness benefit, they have started providing to the customer. If I am a member of, let's say, any gym, and if I am on daily basis, I am going for a morning walk, data goes to the insurance company, and it means the chances of getting claims are very less for those set of customers. Then we talk about the crop insurance. In crop insurance also, data is very important. So again, your data through satellite images, the insurance company have started getting that data. So in every segment, data is getting used. Now, even for the reinsurance industry, now for CAT modeling, this data is very important. Okay. Climate change is happening. There is a huge protection gap. So data is playing a very important role. Now, AI and ML, when you say AI and ML, now I'll give you one example. Let's say if the customer comes to Shri Ram and they want to intimate a claim, and he's filling his claim intimation form on the website. He says that I was driving my car and my vehicle was on the left side, and then he raises that wording, and then he types that I was driving my car and I was coming from the left side, and suddenly the one car came from the opposite side, red car. Then he raises and they say no, it was a white car. Now he does not know that this behavior is getting captured by the insurance company. Why he is saying red, black, white? Okay, it shows that some kind of suspicious activity is there. Maybe this claim can be a manipulated one. So those kind of technologies that insurance company have started now using for, and I was reading one of the report, I think it was of McKinsey report, wherein they told that I think insurance company are able to save around able to increased fraud detection in their companies by 60 to 70%, and they were able to save their cost by 15 to 20%. I read this article last year. When we analyzed the same data in my company, my organization, we also observed the same when we started using this kind of technology. So this is reality. This has become you can say new norm for the industry. AI you have to use. You can't say no, I will not be using AI. It has become the new norm now actually.
And given that there's evidence that it can contribute to at least 15% increase in revenue or 30% reduction cost for insurance, it is something that has to be used.
I'll give you one more example. Now, our data says so actually. If you, let's say, Vaishini, if you come to Shriram and ask for the insurance policy, you get extra 10% discount from Shriram. Why the same so? Why you will get extra 10% discount? Because the data says that the female drivers are good than men's. But this is the data shows that. Maybe because you don't ply your vehicles on the highways, the chances of getting TP claims are very less in the case of females. Maybe in the case of men who drives vehicles on the highways, more TP claim may come. The data says that females are good drivers than other than females. So this is what AI and ML shows with the help of the data.
Thank you, Shashi. I will always refer to this data now and I will quote you.
Yeah.
Thank you. This is a good example. Thank you for the answer and thank you for bringing out the use case as well. That actually helped us understand the whole scenario better and the advantage of AI as well. Manish, now coming to you, and I want to discuss a little bit about telematics. The behavior-based insurance model, especially now, reward customers for their improved habits because that contributes to significant cost savings. Telematics also provides the ability to capture real-time customer data, be it in wearables or environmental data or social media, which is a third-party data for us. And with this, you can perform the risk assessment, both historical and real-time data. Now, what do you think is the future of such advanced technological integration in India? And how are you as an insurance also preparing for such scenario?
So fine. So particularly the use case of wearables for the health insurance is being toyed by the insurance companies for quite a long time now.
Absolutely.
And I'm not that kind of hopeful. I still believe the jury is divided on how effective it is, right? But certainly, I agree that, let's say, the wearables do have a potential, and let's say if somebody is following a healthy lifestyle, right, in a long run, I'm qualifying my words, in the long run, definitely we should see some impact. However, the ground situation is that we don't have a very material benefits which insurers are offering. We do have a plan, right? And some of the other insurers do have a plan where we say that basis, let's say the number of steps you do and some of the other activities, there will be discounts which you will be eligible for. Unfortunately, the usage and the utilization of those discounts are very low. We would love to see the utilization going up so that we are able to analyze more, right? So it's a two-way street, right? So we want customers to utilize, and so that we can actually analyze that behavior and establish that whether there is a definitive link, right? But yes, there are many examples, in fact, globally, where the insurers have been deploying this particular model, and there's a clear way we can learn from them, and then there is no need to actually do a POC again and establish that. And there is a certain leap of faith which insurers can take and then definitely do something on this particular front. My view is that what's actually going to happen is these particular things are going to be used as a sweeteners. Definitely they are getting used, and they are definitely going to be getting used as a sweeteners in terms of extra discounts and some of the other things in ensuring that we are engaged with the customers. Because one of the major problems with the health insurer is the engagement with the insured is very low, because only the 5 to 6% of the people will claim in a year. So basically, your touch point with the insured is low, right? And the people who are not claiming and they are staying there with you for a long time, that engagement quotient is quite low. So using this, you can also do that. Where I see that this particular technology will be first deployed is, as Shashi pointed out, I think the fraud abuse is one of the major area where possibly you can use this, right? Adjudication is something where we are using it at this time point, and we are able to actually bring down our adjudication time to few seconds, and in fact in certain cases less than a second as well. So that is something which is going to give a wow sort of an experience to the customers. Then the other area is in terms of optimizing your own risk cost and ultimately going to benefit. So I think these are the areas which will be first impacted by all these changes, and then possibly that then we will move towards a material use of variables where I can actually offer discounts to my customers basis that.
But this is a long-term plan, right?
Yes.
So what would be the underlying technologies that will support you in this vision?
So see, for the adjudication, we have deployed an artificial intelligence model, which actually reads through all the submissions which insured is making, and we are able to adjudicate that. We're able to run it with a very high accuracy, and the plan is to deploy it in the live situation. Uh, but we are quite confident, and there is a material proportion of business which we are able to do that. In fraud and abuse, we have been deploying the machine learning methods for quite some time now. It's been more than a couple of years, and the results have been good. I'll not say that it's a real-time basis model which actually adjusts every second or every day, but I think the frequency has been significantly better compared to what it used to be a few years back. So we're able to refresh the model at a much higher frequency than compared to what the legacy models were refreshed.
Thank you, Manish. Vana, how is SaaS now helping customers, global customers, achieve operational efficiency? And that is by integrating different parts of insurance life cycle. Is there any kind of return on investment that customers have experienced that you want to talk about? May I request you to switch on your audio as well?
Sure, thank you. Sorry. In general, SaaS helps global insurance customers to achieve operational efficiency by integrating different parts of the insurance life cycle throughout the advanced analytics, AI, and automation. By leveraging its data-driven solutions, SaaS enables insurance in order to streamline their processes across different parts: underwriting, claims, customer experience, but also actuarial and risk management. And here are some examples. Whenever we think about underwriting and pricing optimization, we integrate data, for example, from different internal and external sources like policy data, claims history, IoT, third-party data, in order to provide a 360 view of the whole risk. And like that, we can better assess and give better personalized pricing strategies. Whenever we think about AI-powered decisioning, with the machine learning models that we are providing, we help insurers in order to provide and predict risk profiles, optimize pricing, and automatically automating underwriting process by reducing the whole manual interventions. So these are simple examples whenever we think about underwriting and optimization. But to give you some return on investment by bringing all these points in one analytical and decisioning lifecycle solution, the return on investments with some practical use cases are coming in different parts. Like, for example, whenever we think about data management, we saw with one of our customers here in Europe, 15% gain in the data quality efficiency by using the centralized data quality rules in a single environment and consolidating all the results in a single dashboard consumed by the whole organization. On top of that, whenever we are looking on the modeling part, we saw also 50% efficiency gain in the modeling part. And this is very, very important because that specific customer in Germany, whenever they were developing the models, they could use, for example, several modeling techniques like SAS, R, Python. But each model were requiring around 3 months in order to build and test. By providing governance capabilities in order to integrate those models, and also to provide some model templates automatically off the shelf, they could improve their modeling effort by 50%. A very, very important return of investment that I would like to share with you, and it was also brought earlier in the discussion, it's actually the deployment, the time to market of the results, the time to market of the models. Whenever we are getting basically the results of the models, normally the deployment of the premiums, for example, in productions, it gets to certain, let's say, departments in order to code it in high-performance languages. But with our capabilities, with business rule sets, and also with the ability in order to deploy the decisioning flows without any recoding, just taking the results and plug them directly in the decisions flows, we saw a gain of 95% in time efficiency. So time to market of the models was reduced only for one model with more than 600 business rules from 3 months to a couple of days. This was very, very important. And this is actually the power of analytics and the power of an AI decisioning platform. And linked to optimization, whenever we think about customers' key segments, we also had some experience with some of our customers with capabilities of analyzing the renewal probability, but also optimization and deployment in real time. They could gain 50% in certain key customer segments. So these are, let's say, material benefits, material return of investments of our solutions. And of course, the list can continue with more customer experiences.
Thank you, Anna. Thank you for those case studies and for giving us the numbers on how it will reduce the time to market, especially with the integration of AI. Anurag, my question to you is, Bima Trinity especially has the potential now to revolutionize the general insurance industry in India, which means it will bring in greater transparency and efficiency as well, which also means it will bring in lower premiums. And that is when the market gets absolutely competitive. And as we discussed initially, this will be a complete bias market. So how critical it is to have technology landscape that reduces the need for manual intervention? That's one. And how would this initiative also change the process of pricing insurance products?
I think this Bima Trinity is a very, very ambitious project by the insurance regulator, and it has the ability to completely revolutionize the insurance distribution in the same way that financial inclusion was revolutionized by the JAN Trinity, the Aadhaar and mobile, or the LPG, which kind of pushed the whole Indian economy in 1990s. Although some of the details are yet to kind of come, and a good thing to note that the Bima Sugam CEO has already been identified. But I think if you look at the whole Bima Trinity thing, you have Bima Vistar, which is the all-encompassing product, which meets almost all the needs of a retail customer. You have Bima Vahak, which is the distributor, and happy to know that the industry is going to focus on women distributors, which can have a bigger impact on insurance distribution. And then you have this Bima Sugam platform. Now, the way it has been perceived, the Bima Sugam platform will have to be completely digital, complete technology-based, whereby the pre-sales, the sale and conversion of sale, and the post-sale activity, everything should be possible on this digital platform, while the agent or the Bima Vahak is at the doorstep of the consumer. So I think technology and digitization will play a very, very significant role. And so the insurance company's operations will have to be completely integrated with this Bima Sugam platform, which will include pricing, products. Now, how quickly insurance companies want to change pricing, how much personalization or hyper-personalization they want to achieve, that will vary from in company to company. The companies which are able to achieve a higher level of segmentation, more affordable pricing, more attractive product design, smoother, completion of the entire, the sale process or the claims process, will be able to succeed and will be able to grow fast. But in terms of the conceptualization, this is a great initiative.
Understood. So it will be completely, every process in the sales cycle will be on the digital platform, and
it has to be. I mean, that's how it has been conceived. Otherwise, if the Bima Vahat cannot complete the insurance sales while he is at the doorstep of the prospective policyholder, this will not fulfill the purpose of the. If the claims cannot be processed at a very speedy rate, and without the need. So one of the reasons why the insurance industry was not able to achieve penetration in rural areas was a very high cost of distribution, number one, and a very high cost of servicing the claim. The only solution to reducing the cost is through technology. Where technology can enable, without a person needing to go there, without the insurance company needing to open a branch in rural areas, through these, these are like business correspondents of banking industry, whereby you're just moving around with a mobile or with a small tablet, whereby you can fulfill all the needs of insurance of a prospective insurance buyer.
Understood. So basically, it will easen out a lot of process intensive cycles will be reduced and everything will be digitized, which means faster access to products.
The idea is to have a seamless sales and seamless claim
Seamless
settlement
sales.
process, through this platform.
Shashi, insurance marketplaces, especially now, have increased the transparency of insurance pricing, as we are talking with Anurag as well. Now you can also compare insurance premiums, so which means heightened competition. So when it comes to, say, statistical models, right, what is your view on the usage of these advanced statistical models to optimize insurance pricing and thereby profitability? Are you performing any scenario analysis?
Yes. Now, when we say underwriting is nothing. It's all about analyzing data. Actually, now when we say underwriting, we have different claim ratio, like say state-wise claim ratio differ, make-wise, model-wise, and maybe your OD and TP behavior will be different for different territories. So now white color car is having a different claim experience than having a black car. Okay, so there are so many parameters, and you can see by using these kind of statistics model, you can see and you can find out in this segment wherein you want to focus on. Now, for example, if I'll give you my example in my organization. Now, if you will talk to, let's say, the branch manager and he knows that he's working with how many agents, which agent is having how much claim ratio, whether the frequency is on higher side or the severity is on higher side. He knows that, and he controls their claim ratio on the basis of the tools which we have provided to them. Okay, now not only these kind of, there are external forces also. Like suppose if we talk about the Kerala will always be having a higher TP severity because the literacy is very high in the Kerala state. Even if the small claim comes, they go to MSCT court and file the TP claims. So you will find more TP claim ratio in Kerala state because of having higher literacy. Now, if you compare Kerala with the, let's say, Bihar state, you will find a very lesser severity, TP severity. Okay, and the product wise, even the frequency gets changed product wise also. Tractor will be having a lesser OD ratio, but having higher TP ratio. So these kind of modeling, you have no option but to do for providing better pricing to the customer. Now, as far as scenario analysis is concerned, yes, there are many factors. Let's talk about the recent example of IRDA. IRDA has come up with recent changes in by giving some master circular in health and general insurance. Now, let's say talk about health insurance. Now they've reduced the pre-existing period from 4 to 3 years, moratorium period from 8 to 5 years. It will have an effect on the pricing, definitely. Because earlier you used to cover pre-existing after 4 years, now you have to cover after 3 years. Moratorium period was 5 years, now you have to cover after 5 years. Earlier it was 8 years. Now earlier you used to cancel the policy on a short scale basis. Now IRDA has told that no insurance company cannot cancel the policy on the basis of the short term. It has to be on pro rata basis. It will have an impact on the pricing. Okay, then Insurance company cannot cancel the policy. Even if the customer gets 5 claims from you, you can't cancel the policy. Insurance company can cancel the policy only when you able to find out a fraud. Only in that scenario. Hence, AI ML become very important at the time of underwriting. Whatever you have to do, if you have to filter a client, it has to be at the time of underwriting only. You can't say no to claim at the time of claim. So, and now let's talk about the, let's say, interest rate gets changes. Let's say if any company, let's say if we talk about Shriram General Insurance, we have a good amount of motor portfolio with us. Any change in the interest rate will have an impact on an investment portfolio.
True that.
Okay, so that can also have an effect on the pricing.
Hmm.
Inflation can also have an effect on the pricing. Not only internal, external forces also put an impact on the pricing. Yes.
Multiple factors governing it.
Yes.
Perfect.
Yes.
Thank you, Shashi. Manish, coming to you, when it comes to technical premium pricing, this has been performed predominantly using GLM models, right? And the primary challenges around it is technology resources or procuring the right human resources, especially skill set challenge. So what is the scope of adoption of advanced modeling techniques beyond GLM models? One, and how can we overcome this challenge basically of model validation and model monitoring?
So I think the clear answer is it is certainly going to increase the use of alternative methods apart from the GLM. That is definitely going to increase across various aspects of the actual function. And certainly, I think we don't have constraint of the computing power now, right? So that particular constraint has been done away with. In fact, with respect to the talent as well, I don't see a particular challenge because the younger resources which we are getting, they have an inclination towards learning these technologies, and I think it's just a matter of time when it will gradually creep in to the pricing as well. What will happen is the the usage is going to be different. So I think the first and the foremost thing which will be impacted will be the internal monitoring processes of the insurers, where and there are use cases today where these methods are being deployed to identify the pools of profitability or the pools where there is loss getting emerged. Uh, I think people will use and are using proxies, maybe credit rating or something else, where we can use those proxies to identify these risk pools. I think the other areas, let's say the reserving, will also get impacted. IFRS is there, and it asks you to do stochastic reserving. So definitely, actuaries will be forced to actually look into these methods now and move away from the deterministic approaches. So that is something which is going to be there, and I think that's going to be ahead of the use case in the pricing area. I'm not saying that it will not be used, but I'm saying in the formal way, I think it is going to be used much faster because of this particular thing. And I think one of the key area where we talk very less, but it actually has a very important impact, is the planning. And that is something where I believe the use of these models is going to be much more prominent and much more impactful as well, because you name it, and you need these tools to actually do effective work. So be it the renewal modeling, right? So let's say if you want to actually say that how my renewals are going to behave next year and how my losses are going to behave next year, because there you don't have any constraint, right? So you don't have any constraint that, okay, fine, I can't rate this, I can't use this as a parameter, and so and so I think that is something where the deployment of these tools are going to be first and the foremost. And I think a lot of insurers are actually doing it, so there is no doubt about that if they are not using, in some form of the fashion, they are using it. And I think that's what I believe is going to be the order of preference.
Thank you, Manish. Thank you so much for that insight. Oana, when we talk about, so Anurag, Shashikant, and Manish also spoke about the underlying usage of technology, which also means using advanced analytical algorithms, right? Say data management to advanced underwriting. The problem here is there are a lot of lines of businesses who don't know how to code. So what has SaaS's experience been in providing a low-code, no-code technology platform to its clients? What are you hearing from your customers on feedback on low-code and no-code?
As you already know, SaaS is recognized in order to empower the business users, particularly for the ones that they are not having so much technical skills, in order to leverage the advanced analytics, AI, and machine learning without a barrier of complex coding. This is our, let's say, key investment within the last period. And to address that, we have invested heavily in order to develop low-code, no-code platforms in order to enable the users within different functions, including data management, including the actuaries, and also the advanced underwriters, in order to apply sophisticated analytical algorithms with ease. In a practical case, I would like to give you a customer use case. A mid-sized property insurance actually aimed in order to enhance their modeling process by reducing the whole manual work and improve the efficiency. They maintain the GLMs, so the generalized linear models, because of the compliance needs. We know that GLM is still the benchmark from a regulatory standpoint. However, they experimented the machine learning in order to refine their approach, particularly whenever they were looking on the variable selection, by applying the gradient boosting methods in order to streamline the process and narrow down the most significant variables. But as well, combining machine learning with GLMs, so running the GLMs in tandem, for example, with gradient boosting models, with random forests and so on, they could see with these running conjunctions a more detailed performance comparison in order to identify the best models and the best variables. This actually illustrates the insurer's performance balance between the innovation, but also addressing the regulatory compliance, because GLM, it is still the benchmark. We also saw some other customers that actually being constrained of, let's say, I cannot use any other models, but only the GLMs in front of the regulators, but they wanted to boost their actuarial experience within different areas. Like, for example, whenever they were doing the binning, they wanted to have interactive binning with AI support in order to quickly determine the weight of evidence for the continuous variables by categorizing them directly with AI. Or, for example, they wanted to understand what is the two-way interaction between different variables in order to evaluate the combined predictive strength of variable pairs. So SaaS, it's enabled with low-code, no-code capabilities, simple drag and drop using these methods in order to boost and enhance the whole experience of actuaries, but also of underwriters, of data scientists, in order to faster understand what are the business problems, how they can be addressed, and what are the best decisions that they can take for their business.
Perfect. So this has actually proved to be beneficial, and the feedback you're receiving is quite positive on this.
Yes, but it is very, very important. Another aspect that I have not talked about is actually on the customer use cases, the advanced, let's say, modeling. Whenever we think AI, machine learning, it comes as well with a very, very important element of explainability. We need to make sure that all these stakeholders within the process, they have comprehensive explanation of all the indicators, like, for example, the PD, Lime, IC, Sharp indicators for the model explainability. But on top of that, they also have the automation of bias detection and bias correction so that the customer can understand and identify in case if there are any fairnesses and biases they have to address in the model predictions to assure the equitable and unbiased decision-making process. Probably in India it's not yet there, but here in Europe, we have clear regulations, the European AI Act, that has to be satisfied with all these elements of model explainabilities and all the elements around AI machine learning that insurers are pushed to the next level. So you cannot simply use the machine learning models as you want. You need to explain them. You need to make them less opaque. You need to make them ready to be read by any kind of stakeholder that is required.
Noted. I think once we also have some regulatory around it, or once we have the new data law, the explainability has to be quite seamless for the customers and in a way that can be understood as well. So thank you, Ohana. This is one point to note, and we will look at, there will be a need to look at the global counterparts as well as to how they are doing it, so that the regulations can be adopted in India as well. And this is mostly for customer privacy, safety, and to understand how the technology performs, what it's using, and what will be the outcome of it. Thank you so much. So we spoke about how self-regulation is now coming into the insurance, how now there's need to innovate to bring in affordable products to the market, with faster go-to-market now being the need. Cost-sharing measures will kick in, customer experience being a big differentiator. And India being a mature market, Oana also raised a point on how the key pillars for them is data integrity, compliance automation, real-time monitoring, and how it's necessary to bring in the products that also address company goals along with being compliant, and for the stakeholders to understand the dashboard very clearly. AI and ML will be one of those technologies that will influence every cycle in the insurance, from innovation to the sales cycle. Dynamic pricing will be the need, and there'll be complete integration of value chain and advanced technology, and that will be the goal of regulator. To minimize the regulations, of course, but to give freedom, the freedom comes with a caveat that you need to be responsible, you need to self-regulate, you need to bring in technology and bring in digital platforms so that it is transparent and efficient. Thank you so much for all the participants for giving these insights to us. Now I'll take in some of the audience questions. Manish, the first question is to you. So you spoke about the GTM strategy and technology setup. Ankush wants to know, the GTM also depends on the technology setup for an insurance company. So if your product is approved, but the configuration itself takes 30 to 90 days, then your GTM might be impacted, especially for complex products. How do you perceive this challenge?
So that's something which is actually playing out, and I think what insurers have to do is they need to actually overhaul their systems. And one of the classic approaches to have a modular approach, making sure that you are developing modules which you can deploy across retail product. It is not that something you will come up with brand new with each product. Basically, it's the combination of different modules which will give a new experience to the customers. And then there will be few new modules as well, right? So basically what you need to make sure is that your entire system is agile enough to actually cater to that. And that's exactly what the problem I was alluding to, that you can't afford to have 30 days, and in fact, like even 7 days or 10 days is thought to be sort of a decade. So that's something which you cannot afford, and you need to have a preparation, right? So the approach is to have an overhaul, and I think have a modular approach towards that.
So technology will also then help in designing the products, right?
Yes.
Because if there's not even a 10-day gap, which means the market is going to get actually quite competitive.
Yeah, so maybe one of the example would be that to integrate some of the things which were earlier thought to be done by, let's say, a traditionally IT setup, right? So some of the solutions which I know in the market are now offering that you can integrate directly with your policy administration systems, and you need not to actually code those right into your system, right? So there can be an API straight away thrown from the actual models, and which can actually then serve as your underwriting layer or something like that, right? So basically you cut that particular requirement and do that, but that'll need a rethinking of the entire process altogether.
Noted. Anurag, this question probably you can take. Are there any concerns about customer fairness and being able to explain to a customer why they have a different pricing to another customer in terms of, say, personalization? When personalization becomes the norm, is this going to be one of the challenges? that people have to address?
This is something that is, incumbent on the insurance industry to be very fair about. And hyper personalization only means that the consumer's price is different because some of the factors, some of the traits are different from the other consumer. And so transparency will be very, very important. So the insurance companies will have to be transparent to make sure that there are no consumer grievances on account of this hyper personalization. But going forward, this will be the norm, and it'll have to happen. It'll have to come because the consumers will demand that.
Perfect. Thank you so much, Anurag. With this, we come to the end of the discussion, and I would like to thank the speakers for taking time out for this conversation and for sharing such amazing insights with us as well. We will leave you with a short, interesting video. Please play the video. Team, I request you to do that. Also, I would like to thank the audience for being here. Thank you, team. Once again, I would like to thank the speakers for taking time out and for sharing your insights. It was brilliant. And thank you to the audience for taking time out for this session, for being here with us. It added to the session. And thank you to the ETBFSI and SAS team for facilitating this session. We will see you soon in the next session. Till then, goodbye and have a great day ahead.